being held by Zoom. And before I call upon the secretary to do a roll call, we've been informed that Jacques Jihar, who is now the budget director, is representing the mayor. And on behalf of Jacques, he has appointed Paul Timus to represent him at this meeting. So if Paul is on the screen, I'd like to welcome him and Jacques. And at this moment, I'd like to call upon Katrina, our secretary, to call the roll call.
Okay, good morning. So our private members, Michael Spitzer, Chair.
Present.
Mark Kaplan.
Present.
Bud Larson.
Present.
Representing Mayor Bill de Blasio, Paul Timus.
Present.
Representing Controller Scott Stringer, Jacqueline Thompson.
Present.
Representing Public Advocate, Michael Toomey.
Present.
Sorry, Public Advocate Giovanni Williams, Michael Toomey.
Present.
Thank you. We have a quorum.
Thank you. At this time, I'd like to have a motion to accept the minutes of the February 24th, 2021 meeting of the Audit Committee.
I move it.
Thank you. Without, we have a lot on our agenda, so I'm going to try to be, stay organized. So at this time, I'd like to call upon members of the Mayor's Fund to advance New York City to, and it's hard, and bear with us. There are, I think, over 50 people on this screen. So, and I don't see everybody on one screen. So, representatives of the Mayor's Fund, I'd like to have you make some opening remarks. Introduce whoever here is from the fund, as well as your auditors.
Absolutely. Good morning, everyone. My name is Jorge Luis Paniagua Valle. I'm the co-executive director of the Mayor's Fund to Advance New York City. Here with me is my colleague Danielle Berenline, co-executive director of the Mayor's Fund as well to Advance New York City.
Good morning.
Chris Kelso, our director of finance and operation.
Morning.
And from RSM, I see Melissa Quinn. And is Jen Katz here?
Yes, good morning.
Hello, good morning. So Jen and Melissa are from RSM, our auditors. I'd like to just start with a few very brief remarks. As many of you know, for more than 25 years, the Mayor's Fund, a 501c3 nonprofit organization, has served New York City by building partnerships with businesses and the philanthropic communities to advance public initiatives that improves the lives of New Yorkers. Most recently, in response to the pandemic, we launched the COVID-19 Emergency Relief Fund to help provide relief to healthcare workers, support small businesses, aid survivors of domestic and gender-based violence, just to name a few examples. It's been an unprecedented year, and so we're extremely thankful to our partners in business, philanthropy, and to community leaders who partnered with us this year to respond to this pandemic. There's a lot of work that still needs to be done, but with these partners, we're very confident in being able to achieve our goals for this year. Thank you so much. I want to pass things over to Danielle in case she wants to say anything. Danielle, any comments?
Thank you, JL. I just wanted to thank everyone for listening to us today and look forward to working with you.
Thank you, Danielle. Chris, would you like to begin?
Yes, thanks, JL and Danielle. It's good to be with you this morning. This is the Mayor's Fund's second year presenting to this committee. Our first presentation was in 2019, and of course, we missed last year due to the pandemic. I'll discuss the major points of our FY20 financials and then answer any questions along with our auditor, RSM, represented by Jen Katz, partner, and Melissa Quinn, assurance senior manager. During the fiscal year ended June 30th, 2020, the total contributions and grants were approximately $77.4 million. That's an increase of about $48.1 million from fiscal year 2019. Total expenses were approximately $66.8 million, an increase of $37.5 million from the previous fiscal year. This increase was primarily due to the launch of our COVID-19 relief effort in March of 2020. Our current assets on June 30th, 2020 consists of $14.3 million in cash, $8 million in accounts receivable, $12 million in investments, and $7,000 in prepaid expenses. Our current liabilities include accounts payable and accrued expenses of $6.9 million. Our total net position was $27,407,362. That's an increase of $11.7 million from the previous fiscal year. Of this $77.4 million in revenue, $75.5 million is restricted. This revenue is provided by donors to fund various projects undertaken for the benefit of and on behalf of the City of New York. Approximately $1.9 million is unrestricted revenue. It includes funding from our contract with the City of New York and contributions for our Civic Innovation Program. Of our $66.8 million in expenses, $62 million represents direct program expenditures for the various projects with our city agency partners. The Mayor's Fund received funding from 3 federal awards during FY20. Each of these are reimbursement-based grants with expenditures totaling $1.4 million during the fiscal year. Lastly, the Mayor's Fund received $5.5 million in-kind donations during FY20. This includes $5.4 million in goods and services for the COVID-19 relief effort. This concludes my presentation. I'm happy to answer any questions. Thanks very much.
Thank you. Does the fund have its own audit committee?
Yes, we do.
And how is it made up? Members of management or outsiders?
No, most are city with the City of New York. All of them are. Our Audit and Finance Committee members include Alexis Blaine, Lizette Camillo, Matt Klein, and Maya Yakubovich.
Thank you.
So they're not independent.
Pardon me?
They're not truly independent members of a committee.
Well, I guess because they work for the city, I suppose that they're not, none of them are with outside of city government. That's correct.
I have a couple of questions, Mike, if I
Okay,
may.
Mark.
First of all, you talk about the fact that you supported 100 restaurants. How were those restaurants selected?
Hello, this is JL. So I think you're referring to the restaurant revitalization program. Realize the restaurant revitalization program had a application process that was administered with help from the Mayor's Office of Economic Opportunity. Some of the eligibility, so for restaurants to be eligible for the application, they had to commit to several items, I believe, were committed to pay employees $15 an hour, had to, I think, demonstrate need, and I think it had to be a part of a particular neighborhood, or excuse me, not neighborhood, but area that was particularly hardest hit.
And were they spread appropriately among the boroughs?
I can get more information to this body about how they were spread among the different boroughs of New York City. I don't have that information at my disposal, but I can certainly get that so it's more detailed and accurate.
You send that information to Katrina Stauffer, the secretary of the audit committee, and she'll disperse that to all the members of the committee.
Okay.
Yes.
There's another thing I want to point out, Mike. Some time ago, one of the controllers of the mayor said all the documents have to be double-sided to save the environment. This one is all single-sided. I only point that out. Then I'm trying to understand on page 8, it says net position deficit. I don't see any deficit there. Why is that word there?
That's just to indicate if there were a deficit, it would be, in parentheses, and then it shows total as an actual net position, not a deficit. But we can certainly remove that if there's not.
I don't. The other thing I'm going to point out to you is the official name of the city is the City of New York with a capital T.
Capital T.
And it's, you won't have that. Just now, hold on. How did you incur bad debt expenses of almost $350,000? What's that?
1570.
Take a look there. So we do, do a calculation each year to record our allowance for doubtful accounts. And, part of it is looking at the history of our past experience, and then a percentage of our receivables.
I'm just trying to understand who owes you money that you have to write off the receivable for. What aspect of what you do makes you a creditor of somebody?
Well, our grants are often multi-year grants. And so it may be that we have received a portion of the grant amount in the fiscal year, and the rest is due at a later time.
So it's really not a bad debt expense. It's the fact that the grant hasn't shown up. The money hasn't been paid timely.
Well, at times it is a bad debt in that sometimes it's uncollectible. Sometimes programs end. This particular fiscal year, FY20, was a good example because of the pandemic. One of our programs with our agency partners could not continue, the Vision Expansion Program with DOE, because schools closed. And so a grant that was executed for that program was then discontinued.
I think I understand it better now. Okay. And then I'm just curious. On page 11, you say something is legislative in nature. What does that mean?
I'm sorry, can you repeat that?
On
page 11?
In the last line of the second paragraph, note 2, you say that non-operating activities represent transactions that are capital investing, legislative in nature. What does that mean?
Yeah, so this paragraph is used to just define, because under the reporting, they have to define between operating and non-operating. So this paragraph is really used to define that anything that would be contributions that wouldn't fall under just supporting the program partnerships with city agencies would be non-operating. So if there were, other matters not related to it, so it could just fall under the general umbrella of something legislative. Doesn't necessarily mean that there is something, that's just their defined policy.
There may not be anything, but I'm just curious, what is legislative? When I read this word, I understand capital and I understand investing. I don't understand how you have anything that you legislate.
The funding itself from legislative action, not necessarily the mayor's fund.
Oh, I got it. I don't think it tells. All right.
We could revise that wording.
I don't know what it means, so I think you got to change the tense here and there, but I'm not going to do that.
If while you're looking, Mark, could I go back to page 9? I think in the presentation you said direct expenses were 62 million, and then here I see program services of 65 million. Is there a difference between your direct services and what you call program services?
Yeah, if you note 5 details the program services, and then there is also note 8 that goes through the direct program expenses that are part of the program. So it's probably actually best to look at note 8, which is on page 16, if you're looking at a hard copy, or page 18 out of 30 in the PDF. See, of the 65, of the roughly 65 and a half program services, 3.2 personnel and 62.2 direct program. So that's how they relate to each other.
All right, how it relates. Thank you.
When we get to that, I thought that the note 5 on page 15 was a lot of information, but really does it all belong? Well, you want to put it in, I shouldn't argue with you then. Then when you get to note 7, that it says 2 non-federal donors accounted for 48% of total contributions in the year ended 2020. And the end of the paragraph says 4 non-federal donors and it accounted for approximately 47% for the grants receivable. So I'm trying to understand what's that's telling me.
Yeah, so this is concentration of both revenue and receivable. So the revenue is contributions that were recognized as revenue this year if there were any donor concentrations. The receivable could have a different population because there could be multi-years. So something that the revenue was recognized in a prior year, but it might still be sitting in receivable. And then the concentration is just based on ending receivable. So it's easier to have a higher percentage of concentration because the receivable balance is so low versus the revenue balance, which was over 70 million. So when we look at revenue as a whole,
Okay, I think I now understand it.
Yeah.
Now, when you say 2 non-federal donors accounted, it's a huge number. Who are those donors? Are they public donors, or are they charity, or what?
No. Let's see what our large donors were this year. I don't have that up, but in FY20, we did receive a large amount of money from the Open Society Foundation.
No, that's George.
Yeah, the Foundation to Promote Open Society had a very large matching contribution this year, and that was the bulk of it, and then the National Philanthropic Trust.
Thank you. Yeah.
I'm amused in note 6 that you refer to a contract agreement. I thought a contract was an agreement, an agreement was a contract. All right. Now, you have $14 million, according to note 9, in one financial institution, which is not collateral as an uninsured. Why haven't you taken, sometimes the footnote says, well, we have it with very good banks. And that's what, and we monitor the bank's financial situation or something like that, or you get collateral. Why don't you?
Well, I mean, that's a discussion that we could have with our board. At this time, we have one bank account. We have 2 bank accounts with JPMC. And because the money is essentially, the majority of the money goes to our agency partners, it just doesn't make sense for us to have several bank accounts.
I wasn't suggesting concentration is the answer. You go to a bank and you say, we're going to have, how much is it, $14 million with you. We want you, the bank, to collateralize that, to protect us. Lots of the pieces of the city do that. Or else they say in the footnote that we have the concentration, but we watch the credit of the place where it's concentrated. You don't do either here.
We can certainly take that into consideration. We're happy to talk to our board about it.
I would. And then when we get down to the COVID thing, it seems to me to talk about the fact that it's going to have an impact on the financial markets of many countries, including the geographic area the company operates. You only operate in New York City. This is a funny footnote for something that's strictly New York City.
I believe that's a footnote that our RSM has in with most of its clients, and we did not object to the wording.
Well,
Their standard language.
If I were the audit committee, I wouldn't be going to talk about the impact on many countries, and there's all kinds of, we circulate around our firm every piece of COVID disclosure we can get our hands on, and this is among the weakest I've seen. It's not only the impact on the economy, well, take a look at that. I think, and there are pieces of the city which have stronger language. Mike, I'm done.
Are there any questions? If there's no other questions, I'd like to thank you for coming, and please remember to provide that information that you promised before to Katrina Stauffer. Okay, and once again, thank you for coming, and everyone be safe. The next item is, and take care, Jen.
Nice to see you. Bye, everyone.
Bye.
For those, Jen used to work at Deloitte when she was auditing the city.
Mike, you know, everybody knows you, and you know everybody. Put you up.
Not everybody. Next up is the tax lien trust. And rather than go for each one, I'd like to just get a presentation of them all at one time. And for those members that are here representing the trust and your auditors, could you please identify yourself for the record?
Sure, Mr. Chairman. We have Doug Zimmerman from EFPR Group, who is our auditor. We have Tom Gallagher from RESF Advisors, from Marks Paniff, who assembled the financial statements. We have Sibby Thomas, Matthew Castellano. I also see on my screen Warren Rupel. I'm not sure if he will be having a speaking role on the trusts. And I think that is mostly it. I apologize if I overlooked anyone involved in the tax lien trusts. Hearing none, we'll press on. So briefly, as Michael, you pointed out, let's describe it all at once. You have before you 4 financial statements for the 98 trust, 17, 18, and 19 trusts. And as you point out correctly, we sort of view them together as a program whereby the 98 trust doesn't have bonds outstanding and is sort of the residual recipient of liens after the individual trusts that have been set up to finance the purchases have been exhausted. So the 2017 trust, obviously as named, securitized tax liens from 2017. And as you've noticed, those bonds have been paid off, number one, and number two, the assets have been transferred to the 98 trust. The 2018 trust has only at the moment 4.7 million of bonds outstanding, will hopefully pay down soon and then be transferred. The 19 trust has around 28 million as of February outstanding, and that's moving along as well. So those will also be paid down and then ultimately consolidated to the 98 trust. So that's the thumbnail sketch, and I think as a lot of these committee members are familiar, the tax lien trust is the primary revenue enforcement mechanism for property taxes and water sewer fees, unlike the other capital financing entities we'll discuss later, which finance by and large the city capital program. This does not do that. But nonetheless, the architecture of these entities are very similar to the other bond financing entities we'll discuss. So hence, I and my colleagues are on the hook to discuss these. So with that, I should probably turn it over to EFPR Group, Doug Zimmerman, who has some required communications for the committee.
Good morning, everyone. Again, I'm Doug Zimmerman, partner with EFPR Group, and we, as was mentioned, performed the audit for all 4 trusts. They were all unmodified, clean opinions. The audits are also done in accordance with government auditing standards. Those were clean opinions as well. There were no issues or findings with regards to either the financial reporting system, internal controls, or compliance. We also did report back to the audit committee with regards to the required communication. And again, with regards to that document, there were no issues or items that would rise to a level of concern to the audit committee as well. So the audit went according to our audit plan for all 4 trusts, and was completed in a timely basis prior to the 9:30 required filing. And we had no issues at all in conducting the engagements.
So thank you, Mr. Zimmerman. I don't know if we need to discuss any more general talking points, or, I'd turn it over to the committee for questions. In the interest of time.
If you could just briefly, what is the criteria when you collapse everything back to the 98 trust? Just to get it into the record.
Well, criteria is if the bonds from the given trust have been paid off, because every year when we sell liens, the purchase of those liens from the city is paid for by a bond sale for a given trust for that given year. And those liens, first and foremost, need to pay down the debt that was raised to finance the purchase. Once those bonds are paid down, then the city ultimately is the beneficiary, and for administrative convenience, so you don't see dozens and dozens of these financial statements, we combine those assets into the 98 trust, which we've called, for better or worse, the graveyard trust. So really, I think the main criterion is, are the bonds paid off that finance the purchase? I'd ask Mr. Gallagher for RESF if I've missed anything in that explanation.
No, Jay, that's correct. It's the reason why we use multiple trusts is it's typical in asset-backed securities that a discrete SPV holds the assets that are collateralized by the bonds, and that's really for various legal opinions in structured finance, in addition to keeping the entities sort of bankruptcy remote from any other entities. So that's why we have to use a separate vehicle for each bond sale. And then, as Jay mentioned, for administrative convenience, those entities are collapsed into the 1998 2 trust when the bonds are retired.
Thank you. Are there any questions of the auditors?
New or different this year, Ray? Is it operations as usual? Did the pandemic, by fact, increase the amount of tax liens or anything like that?
I really can't speak to the level of delinquencies that you're talking about. We did not do a lien sale during the current fiscal year due to the pandemic. And we are, continuing to work with, City Council in terms of the criteria and qualifications. I know Department of Finance is also, very much focused. But, as the financials indicate, the bonds have been paying off. People have been paying their, delinquent taxes in order to, keep their properties. So I wouldn't say business as usual, but what I will say is, the program continues to function in spite of all the, atmospherics regarding COVID and, the courts and so forth. So, the administration continues to work with City Council to refine the criteria and keep this going, because the property taxes are, the main tax revenue paying for city operations, and obviously for the water and sewer system. The fees that, are generated, secure the debt and pay for operations. So I don't know if there's anything further to add, Mr. Gallagher, on that topic, but, things continue to work.
It's interesting. I read a lot of financial statements in my various lives. This is the only one that didn't mention COVID.
Yeah, you mentioned that in the last review, and certainly we have a standard footnote footnote, just like RSM. And for the life of me, I'm going through these now, and somehow it's not there, but it certainly is in all the other financials we issue. So somehow that was missed by everybody involved, and certainly apologize for that.
Okay, well, one of the purposes of us giving you a hard time is we try not to miss that. There's another thing. There's a statement here that I've not seen before. It says the financial statements include disclosures that are neutral, consistent, and clear. I didn't know that there was neutrality involved here.
Well, that's in the report to the audit committee that you're mentioning. And so that's something that we put in with regards to just the fact that there are notes to the statements that expand on various, not written with any type of bias by management, whereas the MD&A has management's ability to describe changes from one year to the next and basically craft a message with regards to how the organization functioned and describe the nuances of differences in operations from last year to this year, whereas the notes basically try to eliminate any type of management bias in the description. And so that's just something we put in the audit committee communication, that those notes are basically as written as clear and unbiased as possible.
Well, it's interesting. I don't ever remember seeing that language coming from any other accounting firm in the city. So maybe they ought to take note, or maybe something ought to happen. All right, I guess if we're still going, you'll have a COVID thing next year.
Absolutely. And I did note that we also forgot to capitalize the T and the.
I wasn't going to raise that with you.
So I've already got my notes for next year on that one too.
Okay, are there any other questions? Okay, if there are none, thanks, Jay, and thanks, Mr. Zimmerman and your colleagues from your firm.
Thank you very much, everyone.
It has nothing to do with the audit, Mike. Does anybody else on the committee think it's kind of sad that because of whatever the New York State statutes are, that we have to go out of state to get this done when we have all the banks in the world in New York?
That's a comment that we could have all day talking about.
No, I just every year it strikes me. That's all.
Okay, thank you once again for coming. And next on the agenda is the New York City water and sewer system. I saw Bob. So can you introduce you and your colleagues as well as your auditors?
Sure. Thank you, Mr. Chair, and good morning, audit committee members. So I'm glad to, the last time we did a presentation, it was 2 years ago. And as you know, last year, I'm glad to see everyone doing well, and I hope you and your family are doing well.
Okay.
Yeah. Okay. So, and I'm glad to see everyone, and I hope to see everyone next year. We can actually have a physical handshake. It's been challenging times. I'm going to introduce some folks that are on the phone and on Zoom. And if I miss anyone, please let me know. We have David Womack with us, who's the Chief Executive Officer for the New York Water Authority. Joseph Murin is on, who is our Chief Financial Officer for DP, and also he is the Executive Director for the Water Board. Omar Nazin is on. He is the Treasurer for the Water Board. Olga Chernot, she is our Executive Director for the Authority. I am the Controller for the New York City Municipal Water Finance Authority, and I have the Assistant Controller on Namika Sharma, and our auditors is Grant Thornton and Nicholas Lazzarulo is on. And what I like to do is somebody who's a new face joining us is Mr. David Womack. I'm just going to turn it over to him for a couple of words. David?
Thank you, Bob. It's a pleasure good morning to all. It's a pleasure to be a part of this. My name is David Womack. I joined OMB as Deputy Director of Financing Policy and Coordination in November. So this is my first time before you. And thank you for having me this morning. And in that role, I am also Chief Executive Officer of the New York City Municipal Water Finance Authority, and we're pleased to present to you today. I think I will turn it over to Joe Murin as Commissioner of DEP, and he will start with a few statements, and then I think we'll turn it to Olga Chernot, the Executive Director of the Water Finance Authority. Thank you. Joe?
Okay, thank you, Dave. Good morning, everyone. Good morning, Chair Spitzer, board members, everyone else. So as Dave said, I'm Executive Director for the Water Board, and that's the capacity I'm in today. And I'm also joined by, as Bob indicated, Omar Nazem, who's the Treasurer for the Water Board. So either he or I can answer any questions as we go through this. So I got a few just highlights from the financial statements, and then I'm sure there's going to be other questions as well. But despite the COVID pandemic, the water and sewer operations revenue for fiscal year 20 increased slightly compared to fiscal year 2019 by 0.03%, $3.83 billion. Among other effects, revenues reflect the combined effect of a 2.31% rate increase that took effect for fiscal year 20, as well as which was offset by decrease in consumption and by metered customers and higher delinquencies by some of the customers, which we'll go into more detail shortly. Total revenues, inclusive of water and sewer revenues for operatings were and investment income, as well as federal payments were decreased slightly by minus 0.3% to $4.076 billion. Excluding the city's request for 50% rental payment of $128 million for fiscal year 20, the combined costs of operations, maintenance, and administration of the system were 0.5% higher compared to fiscal year 2019. In the financial reporting, the 50% rental payment is accounted for as an operating and maintenance expense. Excluding the rental, O&M expenses would have been $1.487 billion for the year. Water consumption by metered customers decreased by minus 3.1% during fiscal year 20, which reflects a 1.2% decline by residential customers and an 8.2% decline by non-residential customers, mainly being commercial and industrial. Outside of the city, water consumption by wholesale customers increased by 3.8%, following a minus 9.1% decrease in consumption for the previous year. Net accounts receivable for fiscal year 2020 year-end increased by 19.8% to $457.6 million, reflecting higher delinquencies across all major property classes, with the highest increase in delinquencies observed among non-residential properties. One influence on the revenues and accounts receivable was what we want to mention was the sale of the liens secured by delinquent water bills. We usually sell delinquent liens in May of each year with pre-sale notification starting in February. In fiscal year 2020, DEP began the lien sale process as usual, but following a series of orders issued by both the city and the state, the pre-sale notification process was stopped and final closing of the FY20 lien transaction did not take place. Through the pre-sale notification that we sent out and throughout the ongoing customer outreach to get customers into payment agreements or otherwise settle their charges, we were able to collect pre-sale revenues that were in line with the previous years. Since we did not close the final lien sale transaction, no lien sales were actually sold during fiscal year 20. The agency was affected by the COVID-19 pandemic. DEP's ability to conduct water supply and wastewater operations were not affected, and water quality, too, was not affected by the pandemic. The agency moved to a remote work format for employees in office-based roles who were able to work remotely, which allowed 80% of the agency staff to perform some or all of their job duties using a remote work format. Social distancing was implemented at DEP offices, and staggered or compressed schedules were used where appropriate. Operationally, non-emergency water repairs and shutdowns were suspended. Walk-in retail office locations were closed, and all permit issuances were moved to an online format. Emergency repair permits continue to be available in person. Since the pandemic has somewhat subsided, we've returned mostly to normal operations with some walk-in locations still on limited duties. During fiscal year 2020, several significant events occurred relating to system long-term capital projects, including in April 2020, the city notified EPA of its intent to comply with an EPA order issued earlier in the year requiring the various parties with the cleanup of the Gowanus Canal to share the costs of the dredging and capping the canal. The city is one of the parties required to share the cost, and DEP's estimated allocation of the cost is expected to be significant, potentially over $100 million, which would be an additional O&M cost in future years, in addition to the city's shares of the cost booked elsewhere. DEP is subject to a long-term requirement to construct a cover over Hillview Reservoir before the year 2049. In June 2020, the city provided notice that it was unlikely to reach a milestone, an interim milestone, under the consent decree relating to the preliminary design of the project, and has been working with regulators to obtain an extension. DEP expects to have an estimate of the cost of constructing the cover by the year 2024. DEP is moving forward with a new computer billing system as well and is well into the deployment phase. The focus is much of DEP's personnel involved with the project right now on the training and organizational change management aspects of the system, which involve considerable change to how some of our business process work and redefining how some roles and responsibilities are characterized. The continued workplace disruption of the ongoing pandemic, as well as requests from the project teams for additional end-user testing, employee training, and some additional customization to the software, have led to modified our estimated expected to go live date of the new computer system. The project timeline previously estimated to go live by the end of May of this year now is estimated that the system will go live in the fall of this year. Finally, since we are well into fiscal year 2020, we wanted to provide you an update on several of the key financial metrics we track. Revenue year to date is $2.729 billion, which is slightly ahead for the year of our plan by 5%, but is 7% behind what we actually collected in fiscal year 20. The decline is due to continued elevated delinquencies, change in the timing of when the lien sale notification process begins, and continued decline in water consumption by metered customers, which declined 4.9% compared to last year through the end of fiscal year 2021. Customer delinquencies remain elevated, having increased by 25% at the end of February 2021 compared to the year before. The city requested a partial rental payment for fiscal year 2021 of $137 million, which has already been paid to the city. We believe that a lien sale will be conducted in fiscal year 2021, following the City Council's one-year reauthorization of a lien sale through May 2022. That concludes my remarks, so I open to the members' questions.
Hi, Joe. Joe?
Yes.
And I'm sorry. So I'm sorry. This is Bob Babucci. So I got my remote access got knocked out. Zoom got knocked out. So I'm hoping you could hear me on the phone. And before we turn it over for questions, Joe, I just wanted to go through some of the metrics on the borrowing that we did. So with that, just turning over to some of the activities at the authority, Joe went through the revenue numbers and expense numbers, and just want to go through some of them with regards to the authority. The authority issued $3.2 billion in bonds, of which $1.2 billion was used for refunding. The gross present value of savings of the refunding was $544 million. The authority also legally defeats approximately $334 million of outstanding bonds, using current revenues and obtain gross debt savings of $352 million. The authority transferred $2 billion to the city for construction costs, and our overall net position increased by $193 million. With those metrics, thank you, Joe, for your presentation. We could turn it back over to the audit committee for questions on the financial statements.
Thanks, Bob, and thanks, Joe. Are there any comments or questions from anybody on the audit committee?
Yeah, Mike, if I can. I hate to be the talking.
It was a very good, thorough explanation of last year's activities.
Thank you, Mike.
You talk about the the benefit of defeasance and all that stuff. And some of the other organizations do talk about the accounting consequence and also the real money saving. And you don't, you just say one number. I just point that out. And then there's a statement here that was due to the system acquiring more land around the reservoirs and then granting them to the city. What transferring them? What do you just assign them over without cost? What's the word granting mean?
So I'll start it, but Bob may step in. But yeah, we as the agency, DEP, and the water board do not own the land. So when we purchase the land, there it goes through a process then where that land is transferred over to the city, since the city is the owner of all real property in the land, not the system itself.
Okay, I understand that, but it's done as it's a transfer. Why? Well, all right, the word grant threw me off. I think sometimes when you look at the defeasance, you refer to an accounting loss of $26.1 million, and presumably there was a real economic gain there, or otherwise you wouldn't have done it.
Good morning. Yeah, so are we on page, I'm sorry, Mark, are we on page 15 where we discussed the defeasances?
I'm looking at page 9. It says the fiscal year 19 cash defeasance resulted in an accounting loss of $26.1 million. I presume you wouldn't have done that unless you had a real economic gain out of it.
Yeah, and I think if you go to the, I'm sorry, go ahead.
Yes. Good morning, everyone. This is Olga Chernat, Executive Director of the Water Authority. Mark, I just want to point out that it might not be consistent that we refer to both accounting gains or losses as well as economic benefits, but there are multiple places throughout financial statements where we do present both numbers. So in the MD&A discussions, for instance, on page 15, we do point out that, for instance, our refinancing activity in fiscal 2020 resulted in economic gain of $31.7 million. And then we also present that our aggregate debt service was reduced by $693 million, and we obtained an economic benefit, meaning net present value savings of $544 million. We might be more consistent in terms of presenting all of the relevant numbers, but we do have them in the financial statements.
I noticed when I got to the back that you had it. I just suggest that consistency may be the hobgoblin of small minds. I think Winston Churchill did, but from a financial state, probably a good idea. Let me see what else I have.
Well, Mark is looking. I had a question going all the way to the end, the footnote 13, the third paragraph. It gives me a little concern. It talks about the fact that there's conditions that exist. We're not able to do any kind of estimate about them. Is there any additional information? I don't know. I have no idea how big this is financially and how much of a potential liability it would be.
Yeah, so that information, actually, we draw that information from the controller's office that has a schedule on all of the pollution remediation obligation for the city of New York. We can inquire with them to see if we can get more detail to see if there's any more exposure on this. But as far as what we actually included in the financial statements is the requirements that we have for the standard. But we can take a look at any exposure.
I understand. Yeah, that I understand that you've fulfilled the requirement, but you just kind of made me nervous by suggesting that there was this potential Superfund stuff out there, but we're not getting any kind of parameter as to how big it might be. So anything that you could give somebody comfort that would probably be helpful.
Yeah.
No, I agree with that.
Yes. Okay.
Okay, while we're talking about impacts, if you go to page 32, where you discuss the new accounting pronouncements, one place you refer to it as significant, another one is an impact, and then an impact. And it seems to me that you ought to be consistent about what the impact is or is not, and whether significant and material are two different terms, whether you ought to look at the word that modifies impact any place.
Okay, sure. You know, we could use consistency because a lot of these pronouncements are really not applicable to us, and we mean it to be significant or material, meaning that if it's material, then we will be recording the information on it, and we'll try to use consistent language.
Now a little nit. On note 4 on page 34, you say, last line, the securities held by the trustee in their name. I think it's an it, but it's all right.
Okay.
And then you refer to, this is something that bugs me in other places. You refer to Treasury securities as level 2. And when I was in the business, the market, the federal securities was instantaneous. You could execute almost any number at the price. And I've seen other people call Treasury securities level 1. I don't care, but I just point out.
No, so I have a comment on that. We've actually reached out to the GASB on this, and they haven't given us. They won't write the definitive answer here. But and Mark, so what happens here is when we go out to market, right? The mechanics that we're bidding on and you're accepting 2 or 3 bids on the treasuries. Those mechanics actually tell us that it's not as clean as looking at a stock. It's, if you're looking at IBM at close of business day or any time during the day, you have an actual quote. Our quote is the same. But those mechanics, when you go to bid, actually is in their mind says that is a level 2. So that's the reason why we keep it as a level 2, and hopefully all our financial statements are consistent with level 2. And that's the argument of why we do that.
Okay, well, I used to be in the business. I had a subsidiary that traded this stuff, and I would never. That's interesting. Okay. Right,
and that's the definition by the standards, right? The accounting standards, and that's how we're looking at it.
All right, let me see if I have anything else here that's worth mentioning. This flipping pages, forgive me. You don't have, as I recollect, anything about COVID in here, right?
No.
Sure, there should be disclosure.
Did I miss it?
Yeah. So we have an economic
places, including MD&A discussion. We do talk about COVID and the impact on the system.
Page 16.
All right, I flipped past it. I'm sorry. Let me just take a look. Page 16, economic outlook. I take it back. Sorry. It's fine. Other than the capital T for city.
Are there any other questions or comments?
One more, Mike. At one page, there was a list of employees who were in plans, and it was surprisingly small. I can't find it.
Yes.
I can't find it in a hurry. And when I drive across the reservoir, I see more people than they're reflected here.
Those are DEP employees of the city.
Right. So we have 12, 13 employees for the authority. And the agreement, with the agreement is that the DEP actually supports and runs the system, and we reimburse the city for the operation and maintenance, which includes their staffing. But the actual employees of the authority is just was 13 and now 12.
I got it. So the people I see are city employees.
Right. And through the mechanism of O&M of the operation and maintenance, we reimburse the city for them.
Okay. I have nothing else, but I would like to talk to whoever it was I talked to. If you,
it was me, Mark. So I'll shoot you an email afterwards.
I'll call you.
Yeah. All right.
We have a common interest.
Yes.
Katrina, could you please send Joe and Mark their respective email?
Will do.
Thank you. Hearing no other questions or comments, I thank everyone from the water system for coming and presenting. And everyone be safe. And next on the agenda are what I refer to as the financing authorities. And the first one up is the Sales Tax Asset Receivable Corp.
Sure. Thank you. And for that, we have Jay Olson will speak on behalf of OMB with Bob Balducci and our auditors, Mark Spanik. Jay?
Sure. So, Michael, you were working with, starting with STAR?
Yes.
Okay. So the managing director for, our auditors are Doug Zimmerman, who I believe is on. So just briefly, STAR has been with us for some time. Most of you may or may not. Sorry?
I'm sorry.
Some interference coming from somebody that's on, so I don't know.
Yeah, hi Jay. That just wanted to. Our auditors for all the bond financing entities is Mark Spanik, and Warren Rupel is here to represent them.
Sorry about that. As folks may remember, I won't quote the chapter and verse on STAR, but it was created back in 2005 or thereabouts to relieve the city of the remaining debt service on MAC, Municipal Assistance Corporation. And it's existed, since then, where debt service is payable from an annual 170 million payment from the Local Government Assistance Corporation. So the ins and outs are very, very simple. 170 million of LGAC money coming in, paying debt service on the way out, and that's pretty much it in terms of what goes on STAR. So unless there's anything further, I should probably turn it over to the chair for what else he wanted to discuss on the Sales Tax Asset Receivable Corp.
Nothing. I fully understand what STAR is.
I have one question, Mike.
Sure.
It bothers me. It must be something I'm not understanding. It says STAR's liabilities are almost entirely composed of bonds payable. The unamortized original premium and accrued interest. The premium you get is actually an increase. You sell a bond that's at par and you sell it at 103. So the premium is actually extra assets you get, and it reduces the real interest rate.
Right. So I'm hoping I'm back on.
So
you guys can hear me?
When you amortize the original issue premium, what that means is if you sold the bonds at 105, the real interest rate is lower, and the premium you got up front, you're amortizing over the life of the bond. Is that how it works?
Yeah. So Mark, the actual liability is so you do get assets, right? So you're getting in cash. So if you're selling at 105 and the bond is at 100, you got 105 in cash, right? So that's your asset, and the credit would be actually 100 for the bond and 5 for the premium. That's on the credit side.
Right.
So what your long-term liability, it makes up of the actual it's actual the bond payable and the premium that you book, which you're going to amortize over the life of the bond.
I got it. All right. I thought so. Okay.
Okay. I assume it's all the same individuals that would be presenting all these financing. So the next one up is Hudson Yards.
Yes. Jay?
Sure. So for Hudson Yards Corporation, as Bob properly points out, our auditor is Warren Rupel from Mark Spanik. And, as for, the existence or the reason for Hudson Yards Infrastructure Corp., it's to finance the extension of the number 7 line further west and south, and park improvements around that, Hudson Yards financing district, the far west side. Revenues for 2020 totaled $440 million, including $120 million of district improvement bonus, which is a one-time payment from developers to build a bigger building. $129 million of tax equivalency payments from New York City, which is basically the growth in property tax base for that district. $57 million in payment in lieu of mortgage recording tax, and $120 million of pilot payment in lieu of taxes. So this is a substitute for property tax that developers pay that, represents a bit of a discount on property tax as an inducement to develop in the area. So a fair bit of money coming in during fiscal 2020. Expenditures included just shy of $500 million, not only, payments for debt service, but also capital costs, $4 million related to the subway, $10 million in public amenities and property acquisitions, so basically the park, $1.3 million for Hudson Yards Development Corporation. They oversee the development in the area, $132 million in bond interest, and $350 million as a payment to New York City, which the city counted as revenue in fiscal 2020. So that's sort of the top line items on Hudson Yards. I don't know if there's anything further to add before turning it back to the committee.
And, your question is directed at the individuals with you for Hudson Yards or the audit committee itself?
Or the audit committee itself. I mean, I didn't hear anyone jumping in from my side, Mike, so I suspect the floor is yours.
Okay. Mark, Bud, anybody else on the audit committee have any questions?
I have an office next to Hudson Yards. We got 400,000 square feet and nobody in it.
I hope you're paying the rent so they can pay their debt service.
Well, actually, we're a little east of it. But I have a question here. Where is the COVID disclosure?
It should be in there. I know Bob, as mentioned, was very fastidious about adding that. So it should be at the back end of the MD&A.
Page 11?
All right. I'm scared. I read all this a couple of days ago, and now I'm trying to read it again.
He is entirely correct. Page 11 of the printed page.
Oh, I know what my comment was. The word could. The world held an outbreak. H could materially adversely be affected. Could or would? Since one of your principal tenants went bankrupt and a number of others did. That was my comment. If I were writing this thing, I would soften the word could. You got Neiman Marcus already bailed out.
I think we're closely looking at it. At the time we did these financial statements, we actually thought about this well, but we are monitoring our pilot and our TEP payments very closely, right, Jay?
Yeah, I mean, that's exactly right. I mean, could versus would. It certainly doesn't help in terms of bankruptcies and lack of occupancy. That said, we are making debt service payments and revenues continue to be paid. And the question is, where do you draw that line in terms of impact? So I'm not doubting that there is a problem here, but
I know. Well, if you were writing a public offering prospectus, which is what I do a lot, you would think about would and could. That's all.
Well, we certainly have no shortage of public offering prospectuses as well, too, with this crowd. So there's no shortage of lawyers looking at all these disclosures.
Okay.
Okay, thank you for Hudson Yards, and TFA, Transitional Finance Authority, is next.
Sure.
Jay, go ahead.
And once again, Warren Rupel remains the auditor from Mark Spaniff. Thank you, Warren. I see you there. The TFA was created back in the late 90s to assist the city in terms of the binding constraint that the constitutional debt limit had in that time. Since then, TFA has been expanded to, in terms of its financing capacity, to be a bit more open-ended, subject to the remaining debt incurring power under the constitutional limit, giving effect to having $13.5 billion outstanding over and above that. So TFA is an incredibly important entity that finances the city capital program writ large, and the building aid revenue bonds, which were authorized in, I believe, 2007, finance the educational capital program in particular. So in 2020, TFA issued $3.6 billion of new money bonds for capital purposes. Those were future tax secured for the capital program writ large. Issued $250 million of BARBs for the educational capital program. Distributed $3.9 billion of bond proceeds to fund city capital expenditure. It received a grant of $2.5 billion, which is the city prepayment, basically the city rolling surplus resources to equalize expense and revenues in a given year. So that provided similar budget benefit in a subsequent year. TFA collected $12.3 billion of income tax and paid debt service in full on future tax secured bonds and building aid revenue bonds. You have the financial statements in front of you in terms of PIT collections and building aid revenue bond collections and disbursements in terms of debt service and capital. The assets and liabilities are considerable. I don't know that I'll go over all of that in the interest of time for the committee. So I pause there if there's anyone on my side of the table that has anything to add before turning it back over to the chair, Mike Spitzer, for his questions or comments from the committee.
Thanks. I have one question. How is COVID affecting the income tax?
Well, it's certainly not been a positive, but that said, and we have been disclosing, our forecasts and, the collections a bit. And, there has been a bit of a dip, but there's been no problem paying debt service whatsoever. There had been a timing gap last year in terms of the PIT and the federal collections. So when the feds moved things out from April to July, that had an impact on the cities as well, where the city followed that practice. But nonetheless, the machine keeps coming. The machine keeps humming. Revenues keep getting paid, and we retain to pay, TFA debt service, one way or another. So it has been a negative impact, but has in no way impacted our ability to pay debt service or carry out operations. It's just that the city may, feel a little less residual based on that, because the TFA has the first claim on income tax before the city gets it.
Jay, that's correct. The PIT actually flows through the TFA first. So we've been receiving that money and just, and retaining for it. So really has not had any type of effect on the TFA.
Thank you. Any questions from the city audit committee members regarding TFA? Bud, Mark?
Yeah, no real change here.
Yep. Okay, thank you, Jay and Bob, for TFA. Next up is TSAS.
Hey, you are up again.
Sure. So once again, same cast of characters. Warren Rupel represents our auditor, Mark Spaniff, And TSASC, somewhat akin to TFA, was created to alleviate constitutional debt limit pressure on our financing program back in the late 90s. So TSASC had issued roughly $1 billion of debt that was not subject to the constitutional debt limit. And that debt is paid by a national settlement between the states and tobacco companies for, the tobacco companies, alleged or perceived, I'm not quite sure what the appropriate way of characterizing it, their impact on healthcare costs borne by the state. So I don't know if anyone watched the movie The Insider with Al Pacino and Russell Crowe, but great portrayal of what went on with the tobacco companies and the drama that led up to this particular settlement. And the settlement basically continues in terms of the tobacco companies paying the states money forever, effectively, in exchange for not getting sued for their activities. So that continues, and the settlement is a rather complicated formula based on, among other things, cigarette consumptions, and there are further adjustments that are state-specific that affect the revenue. So with that, for 2020, we collected $188 million of tobacco settlement revenues, which was $24 million than the prior fiscal year, transferred $118 million to the trust, which is a residual trust, ultimately paying the city, which is $15 more million than last fiscal year, paid debt service as scheduled. The assets and liabilities, can be seen on page 12 of the net position. However, one of the big issues is the tribal, the state-specific aspect related to sales on tribal reservations. There was, that has been a negative deviation from the original forecasts done back in the 2017 bond sales. So there had been shortfalls in the past few years relative to forecast, and that continues to be the case, and that is prompting TSASC to draw on its subordinate debt service reserve fund to cover subordinate debt service. So we allude to what we expected to happen in December of 2020 in terms of a draw. Prior to that draw in end of November 2020, we drew, I believe, 12.4 million there's a 12.4 million balance in the subordinate reserve after the draw that was made. So, things continue. For Mr. Kaplan, there is a COVID disclosure, as you asked. I suspect the would versus could distinction is in there as we looked at that disclosure across all the entities we're discussing. One could then have an interesting discussion on how COVID might impact how much people smoke these days. So that maybe gets a bit beyond the purview of what we're talking about today. But, we are, again, still paying debt service. We are drawing on the reserve, unfortunately. And, I pause there if there's any comments from our side of the table from TSASC before turning it back over to the audit committee and their questions.
No, Jay, thanks for you summarized that well.
Thank you, Jay. Thanks, Bob. Any questions from the city's audit committee?
I want to point out, Mike, which I neglected to do, of this Mark Panis paragraph they put in that said the report is solely for the information used of the board of directors, the audit committee. I assume that's referring to the board of directors of TSAC. So we are not literally able to look at this if we believe what Mark Panis has put in here. So let's think about getting that out again, fellas.
I'm not sure where you're referring to, Mark.
The last paragraph of your letter say this report is solely for the benefit of, and it's hard for me to think we're sitting at this audit committee where we're discussing it in a public forum that says it can't be used anybody unless permission. So you better give us permission or you take the thing out, I think.
We could add the city audit committee to that. That's not an issue.
I know that. You and I have had this tussle before.
I know.
Okay.
And thank you. Hearing no other comments about TSAS, I'd like to move on to the fiscal year 2005 securitization. I'm very happy to see there's no debt at the end of 20, and can't believe it's that long ago that we created this.
And it worked.
Well, Mr. Chairman, you've certainly decided to end our bond financing entities with a bang and not a whimper. So I commend you for your selection of what went first, second, and third. Fiscal year 2005 Securitization Corporate, once again, is, our auditor is Warren Rupel at Marks Paneth, same cast of characters previously. And as you correctly pointed out, no more debt outstanding. So, I suspect this may be the last time we're having this conversation, although maybe not, given we did publish, I think, a stub financial statement for fiscal 21 covering the end of operations. This was created back, as aptly named in 2005, to restructure a city GO refunding escrow. And this is one of these interesting teachable moments and examples of the peculiarities of municipal finance, where the city general obligation refunding escrow, the refunded bonds were escrowed to maturity rather than the call date. And the city retained the option to exercise that call. And that at the time provided the city around $50 million of benefit, which was rather timely given, the events of 2001, which we all remember. So, the federal government allowed us to move forward with this transaction, which otherwise wouldn't have been permitted under federal arbitrage rules. And we proceeded with exercising the call on the GO escrow, redeeming the refunded bonds earlier than maturity, and being able to recover over $50 million of economic benefit for the city. And the securitization corp bonds were then secured by the escrow, original GO escrow, and those bonds were scheduled to be paid off, as we pointed out, or as indicated here, in April 2020, which they were. Is it 20 or 21, Bob? I'm glitching that.
It's 20.
It's 20, of course, because they're not here. So the bonds are paid, and we are in the process of dissolving the corporation, one less entity to worry about. So it provided its benefit all up front when the city needed it, and it's run its course, and on to the next thing. So I don't know if there's anything to add from our side of the table before turning it over to the audit committee.
Jay, so just that's we did do a stub period financial statement, completed that, reported it to our audit committee and our board, went through the dissolution process with PAAA governance, and all we're waiting for now is just a receipt. All of the required administrative paperwork was submitted to the government entities, and all we're doing is waiting for a receipt of dissolution, and we will be sending that over to Jackie Warburton and vacating our column in the CAFR.
Have a few inches of paper.
Saving some ink.
Yeah.
Okay. I assume there's no questions from the city's audit committee side.
Right along.
So I'd like to thank you, Jay and Bob, for all the entities that you had to present. And I wish you, be safe and be well. Hi, Warren.
Yeah, Mike, could I just turn over to David for a couple of closing words?
Sure.
David.
Members of Mike and Mark, Bud, and members of the committee, thank you for taking time to allow us to talk to you this morning. I would be remiss if and I guess this meeting did not happen last year because of COVID, and I think the last time you had this meeting, Alan Anders was sitting in my chair. And, I know I've got some very big shoes to fill. I'm pleased and, a little daunted to take on this role, but Alan was a lion in our industry, and he was a friend. I actually worked with him at the beginning of my public finance career at JP Morgan. And I hope that in this meeting, we all just remember him fondly and keep his family in our thoughts. But, he was one of my heroes and a client and a friend, and I just wanted to pass that along. I look forward to meeting with you next year.
Your comments were well received, and most of us all knew Alan very well. And I go back a very long time with Alan, so he was a one of a kind. But thank you, and good luck in your civil service career.
Thank you very much.
That concludes, I'd like to have a motion to recess the public session of the audit committee.
So moved.
So moved.
Okay, at this point, I'll turn it over to Katrina to move us into executive session.
Mike, before we go in, we just want to make sure we need to identify there's two phone numbers on. We don't know who they belong to, a number starting with 961 and a number starting with 917.
I have a cell phone 917, but I'm not using it.
No, it's the ending digits are 3494. We just want to identify who those phone numbers are.
The person with the phone number 961-3745-3413, identify yourself.
Yes, good morning. My name is Anthony Odunsi. I work for OMB, specifically a single audit.
Anthony's with me. His number is the 3494.
Okay. And then the number 961-3745-3413.
Maybe just for fun, it's a Russian spy, huh?
I'm not sure who that phone number is.
Okay, Kat, since nobody seems to be identifying themselves, we will remove them as we go into executive session.
Yep. Okay, so then we can move into exec. Let me just make sure we're in exec.